So I'm Marty Sakata. I started this group many years ago. So the story is that I worked for Swiss Bank in Zurich, and there was a huge financial crisis with a company called, well, Swiss Bank doesn't exist anymore in its old form. There was a company called Long-Term Capital Management, LTCM, and it was going under because it made some risky bets, and it bet on Russia, and it did a lot of leverage. And the two companies at the center of that were a company called Bankers Trust, which got swallowed up by Deutsche Bank, and UBS, which was forced to be taken over by Swiss Bank with some guarantees from the Swiss government. And so I came back to the States to help with some of the reorganization, et cetera. I started a group of Wharton guys investing directly in private equity shortly thereafter and morphed into this family office group. So we have had, 400 events, 200 dinner parties. We've taken 6,000 people to dinner. About 4,500 of them have been family offices. And we have had more than 50,000 people attend our events. When COVID happened, we moved to virtual hybrid events. So we have people in person and people online. We'll have around 300 people in total for this event. So we had about 300 people register. About 200 of them are online. The New York event, we already are around 300, 350 for next week. So we cover a lot of topics. I'm going to talk about the upcoming events on the calendar, and then we'll introduce Matt Mangan from K&L Gates, who is our sponsor today. So we're going to be in New York next week. We'll be back in New York again in September 6th, and then we'll be back in San Francisco at the end of September. We're going to be in Dallas in October, and then we anticipate, we will be in Miami for Art Basel, which is just a fantastic event. I highly recommend it. I think we'll have Tim Draper again, and I hope that we'll have John Molina there as well. So it should be really just a fantastic event. Last year we had, 200 people in person. We had 2 dinner parties, 60 people each dinner party, and we had around 300 people online for that as well. And then we'll be back in New York pre-Christmas on December 12th and 13th. So Matt is here, and I want to have him introduce K&L Gates. He is he runs the office here in San Francisco, so he kind of has his finger on the pulse of everything these days. So he's going to talk about his practice, K&L Gates, its far-flung enterprise, and also just what he sees as hot topics. So Matt.
Thanks, Marty. I appreciate the introduction. It's great to see you again. Great to have you in person. Welcome. Everyone. We were last year with IvyFON in San Francisco in this office in January 2023 during the JP Morgan conference. And I'll tell you that it's interesting. The world has changed in many ways in that short period of 6 months. We were not talking about, there was a few conversations about artificial intelligence, but since then, ChatGPT, the movement in that area has been quite stunning. Interest rates were up. There was a feeling that the markets were potentially going to see another leg down. Turns out they went up. Yet there were several major bank failures, particularly in this region, all really quite dramatic events in the last 6 months. And maybe just from my vantage point, and I do manage the K&L Gates offices in San Francisco and in Palo Alto. And I'll tell you that it's interesting to see what's happening. There's been a slowdown in the emerging company venture space as companies pull back. It's harder to raise capital. We have a normalization in the litigation world where people were almost moving too fast to fight over things. There's a rise, an increase in litigation, which I would call kind of a more normal period. Interest rates are dramatically impacting real estate and interest-sensitive businesses. They're almost stuck in the water right now, trying to figure out how to refinance. My practice involves private funds, work for investment advisors who do private equity, private credit. And one of the notable things that I've seen recently is they are saying that they're seeing high-quality borrowers today in the private credit side, where these borrowers would have normally gone to banks in the last couple of years and had really nice interest rates. They're now falling down where banks are not taking on some of those really high quality real estate assets. And so these borrowers are going into the private credit world to get their credit. So this is, I think, a sea change and something that will really impact real estate and interest-sensitive businesses. I think there's an article in Bloomberg today about the impact this is going to have on private equity firms and the finance, the increased costs in private equity deals, so impacting private equity funds and managers. So real quickly, Candle Gates is a global firm. It's a full-service firm. In California, we have about 100 lawyers across Orange County, Los Angeles, San Francisco, and Palo Alto. And we do many areas. I mentioned litigation. We do real estate, securities, fund investing, and quite a lot of family office related tax structuring. I think I'll leave it at that so we can get moving on the next level. I'm looking forward to meeting all of you and having a chance to talk. It's always good outside to have a chance to catch up and hear about what you're doing, your perspective. So welcome.
Fantastic, Matt, and thanks so much. We have a fantastic dinner party planned today, which is oversubscribed. So I'm really looking forward to everybody participating in that. So, I because I've run this group for so many years, I do sometimes speak to other groups outside, and once in a while they ask me what I see as like hot investment topics, et cetera. And I was hoping that the group here could tell me what they see as being very interesting. But as Matt was alluding to, the private credit market is tremendous. It was big in 2008 through 2010. And that's when all of these peer-to-peer crowdfunding or peer-to-peer lending sites came up, and they grew dramatically. So private credit secondaries, I think people were anticipating that secondaries would have a much bigger impact than it has had so far. But I guess that what happens is that there's so many institutional secondary companies that they kind of have smoothed out the curve. Whereas in 2009, I think your secondary spread was, things went to 50% secondary spreads, and I don't think that's happened yet. Or maybe those are private transactions that are occurring. So it's very interesting, and also obviously AI is changing the mix, and we're seeing a ton of AI diagnostic tools that are coming out, and then healthcare seems to kind of be weathering the storm, although it still is a storm for sure in the healthcare space, whereas other venture may not be getting as much attention as healthcare. So venture, private equity, lower middle market private equity still exists. I think the big issue with private equity is that there's a lot of private firms where there's baby boomers who will be retiring, and people have to understand what's going to happen with the assets that they're retiring from and how they're going to sell them, sell their businesses, et cetera. And that's intriguing, I think, from a private equity point of view. Hedge fund space, they're still trading. I had an interesting conversation with a guy who's running an artificial intelligence trading firm out of Arizona. He used to work on Wall Street, but he's a little bit retired. And he said that every AI trading system that's been developed of the last 5 or 10 years has been bought by a hedge fund. So that's pretty intriguing, I think, in the business world. So any thoughts on other things I'm missing here? Globalization, things like that. We've had instances where companies that presented here virtually were funded by family offices outside the United States, et cetera. Does anybody here have a comment on what they think is a hot area that we're missing? Or, yeah, Zach?
Within private credit, at the intersection of private credit and venture capital is venture debt. That's probably what but it's also where there's BlackRock just bought one of the biggest venture lenders.
Right.
That's huge news because
that's really about why we did it in terms of access and differentiate part of the market and higher risk adjusted returns. And so it's great for us. But I think that's where there's a lot of activity, but it's a small segment of the market.
Yeah, I think venture debt is very intriguing. I think the issue with BlackRock and their acquisition is how well they're going to be able to administer it as such a large firm, and their ability to really drill down and see how it works correctly. So these are very interesting times to see if these massive asset managers can kind of zoom in and run what has been until now smaller organizations. So I mean, outside of the Silicon Valley Bank function that was out there that was kind of took over the world, right?
About them actually running they bought a firm that's got a track record. What's happening now in the venture debt space? almost very different parts of the ecosystem historically that never even talk to each other. Really, the only place where they connect is in BlackRock. It's a boutique model. Think of them as like a bunch of other big asset managers. They go out and they buy managers that run their businesses.
It's like a multi-strat. Absolutely. Yeah.
They're not going to like BlackRock people.
You never know, but so something that's intriguing that I think that that probably Matt could address as well is that in the fund space, there's really differentiating questions you have to be able to answer. And so Darius Dale kind of actually is in this space where he provides information to hedge funds and other funds to give them an advantage on, information that's kind of immediate, et cetera, alerts, et cetera. And I think that, you have to differentiate yourself. And one of them is, what's your deal flow? What's your, information advantage that you have over people? Obviously, capital matters. Your ability to manage the capital and to underwrite the deals is everything, right? So these are intriguing times. I think it's going to be very interesting for private equity, because one of the basics of private equity, one of the legs of private equity, the private equity stool, is that cheap credit has always been a big thing, and I don't think that those cheap credit sources are available anymore. Banks have pulled back, right? So it's going to be really intriguing what happens in the near future. So with that, I'm going to one more question.
I just wanted to bring up, with all the changes going on in AI and so forth.
Yeah.
We need to keep our eye on digital currency, which is coming very soon. It's not a matter of if, it's when.
Do you mean like digital currency, like centralized bank digital currency, or are you talking Bitcoin?
No, not Bitcoin at all. I'm talking about digital currency where there will be no more dollars. Keep in mind, originally we had the barter system, then we went off the gold standard. We just kept the printing press going. This is going to be a whole nother level. It's going to affect all of us in this room.
So you're saying no more U.S. dollar?
No more U.S. dollars. It's already been passed by Biden. I forget the number of the bill, but it's already in place. It's a matter of when it's going to be implemented. Like, I can give you a source after you're done.
Just one comment from Matt.
Yeah, so there is, I think it's a federal, the Federal Reserve is working on effectively a digital currency. It has a name, Fed something, but I agree with you. I think a lot of the banks and a lot of the fintechs are working to disintermediate the big credit card companies that are worried about their moats. Yeah, go ahead.
Well, and if you ever get your statements from any of your banks, they're all trying to go paperless as well, which is a minor thing. This is much bigger than that. Also, you've got China, who wants to be the dominant power politically, economically, militarily, you name it. And they're also trying to get away from the dollar as a standard and working with other countries, including Saudi Arabia and others. So this is a big challenge. It's coming.
Yeah, there's gonna be a lot of security issues with any kind of digital currency. So
let me just do one last point, and that is, we talked a little bit about Bitcoin. The market for funds that are investing in cryptocurrencies, they are finally recognizing that the SEC is sending major bombs their way. So people are finally starting to say, we think the ecosystem doesn't believe these are securities, but we get it that the SEC is coming after this.
Yeah, I think Bitcoin has a great niche. I think that the other Ethereum, et cetera, they may have challenges.
One last real minor point to add is that all the world banks are loading up big on precious metals, in particular gold. So that's another red flag.
Interesting. Yeah. So commodities, which we're going to discuss after Darius, although Darius is free to discuss them as well. So why don't you introduce yourself?